Tesla's stock is crashing, sales are plummeting, and Elon Musk's political ties might be to blame. But can Musk still save the company? With tariffs threatening global markets, rising competition, and protests targeting Tesla's CEO, Tesla's future seems more uncertain than ever. Investors are pulling back, loyal customers are losing trust, and Musk's political involvement might just be the tipping point. In this video, we'll break down why Tesla's in trouble, the real impact of Trump's tariffs, and what Musk must do to turn things around before it's too late. Keep watching to find out how Musk can fix this and whether Tesla has a shot at bouncing back. And don't forget to subscribe for more insights on the latest business challenges. It all started when President Trump's tariffs hit the market. These new trade policies were designed to protect U.S. industries, but have had unintended consequences for global companies, especially those with a large international footprint like Tesla. When Trump announced new tariffs on imports from China and other countries, it set off a ripple effect in the stock market, causing major declines in technology stocks, and Tesla wasn't spared. At the start of the year, the U.S. stock market saw its worst performance in years, with tech stocks like Tesla among the hardest hit. In fact, Tesla's stock plummeted nearly 45% in 2025, erasing the gains it saw after Trump's election win in 2024. Tesla, being a key player in the tech world, was hit particularly hard by these tariffs. The tariffs, which targeted imports from countries like China and the European Union, resulted in higher production costs for Tesla. The company, already struggling with stiff competition, found it difficult to maintain its competitive pricing, especially in international markets. Let's take a closer look at the numbers. Tesla's sales in Europe and Asia have been tumbling. In China, Tesla's second-largest market, sales dropped a staggering 50% earlier this year. This is primarily due to rising competition from local manufacturers in China, who are ramping up their production of electric vehicles. Chinese companies like BYD, NIO, and XPeng are pushing ahead with their own electric vehicle models, gaining traction not just in China but also in Europe. The shift in consumer preferences and the expanding availability of alternatives have left Tesla vulnerable. In Europe, the situation isn't much better. Tesla's sales have fallen by nearly 50% over the past few months, with local competitors like Volkswagen and BMW increasing their focus on electric cars. These companies are able to offer competitive pricing and take advantage of strong brand recognition within European markets, which has made it more challenging for Tesla to hold on to its position as the leader in EV sales. But the downturn isn't just limited to international markets. In the U.S., Tesla's sales fell by about 11% between December and January, as reported by S&P Global Mobility. This decline is somewhat seasonal, as Tesla typically ramps up sales toward the end of the year, leading to a natural dip in the first quarter of the following year. However, this decrease still points to a broader trend. Tesla's dominance is being questioned as other car manufacturers catch up with their own electric offerings. So, what's really driving these sales declines? While it's true that competition in the electric vehicle market is intensifying, there's another significant factor at play: political polarization. As Elon Musk became more closely associated with Trump's policies, Tesla started facing pushback from a section of American consumers. Musk's vocal support for President Trump and his role in the administration have made him a polarizing figure. This has caused many customers, particularly in Democratic-leaning states, to turn away from Tesla. Historically, Tesla has enjoyed strong loyalty from repeat customers in these states, but this trend is changing. Tesla's repeat purchase rate in blue states fell from 72% in late 2023 to just 65% by the end of 2024. In contrast, Tesla's repeat purchase rate in Republican-leaning states remained more stable, increasing slightly from 47.6% to 48.2% in the same period. This shift suggests that political views are playing a significant role in consumer behavior. Many potential buyers in blue states are distancing themselves from Musk due to his prominent role in Trump's administration and his controversial political stance. This growing divisiveness is driving a wedge between Tesla and a portion of its customer base, particularly those who disagree with Musk's political influence and his support of Trump. Elon Musk's political involvement has only deepened, and with it, the controversy surrounding Tesla. Initially, many investors believed Musk would take on a more traditional role as a business advisor to the president. But instead, Musk has become deeply involved in Trump's policies, which has made him a much more visible and controversial figure. As Musk's political visibility increased, so did the public protests against him and his company. Tesla's stock surged after Trump's election, as investors expected Musk's close ties to Trump would be beneficial for Tesla. However, Musk's increasing role in the administration and his involvement in controversial decisions started to raise eyebrows. Many investors were concerned that Musk's attention was being divided between Tesla and his other ventures, including SpaceX, Neuralink, and X, formerly known as Twitter. This growing skepticism from investors has led to a dramatic drop in Tesla's stock. In fact, Tesla's stock has lost 45% of its value in 2025 alone. This drastic decline reflects investors' worries about Musk's shifting focus and his polarizing political influence. Rather than being a traditional business leader, Musk has become a figure whose political affiliations are now seen as intertwined with Tesla's financial success. Despite these setbacks, Tesla is still the leader in the electric vehicle market, but it's no longer operating in a vacuum. Tesla is facing increased competition from traditional automakers like Volkswagen, BMW, and Ford, who are now investing heavily in their own electric vehicle lines. At the same time, Chinese electric vehicle companies such as BYD, NIO, and XPeng are rapidly expanding and making significant strides in global markets, especially in Europe and Asia. However, Tesla's future isn't just about sales numbers. The company's most significant value lies in its vision of autonomous vehicles. Musk has promised that fully autonomous cars will soon be a reality. The real question is whether Tesla can deliver on this promise. Musk's vision for a world with self-driving cars has driven much of Tesla's success and brand loyalty. But there's a problem. These promises have been made before, and Tesla has missed deadlines multiple times in the past. The biggest hurdle Tesla faces isn't just competition. It's the technology that is supposed to define the brand's future. Without fully autonomous cars, Tesla's growth may be limited, and investors might lose confidence in the company's ability to innovate and lead the market. Elon Musk has always been a figure of controversy, but he's also been a master of reinvention. Tesla's rise from a niche electric car manufacturer to a global leader was largely due to Musk's bold vision and ability to disrupt markets. But the question now is, can he turn around Tesla's fortunes amid the current challenges? The answer isn't clear, but Musk has several key assets in his favor. For one, Tesla is still one of the most recognized electric vehicle brands in the world. The company has also made significant advancements in battery technology, which could keep it ahead of competitors in the long run. Additionally, Musk's other ventures, like SpaceX, remain highly profitable and could provide the financial cushion Tesla needs to weather the storm. To summarize, Tesla is facing a perfect storm of challenges, from the impact of President Trump's tariffs to rising competition in the electric vehicle market and Musk's controversial political involvement. While the company's future isn't certain, Tesla's ability to innovate and its dominance in the EV sector mean it's not out of the race just yet. Elon Musk's ability to handle these obstacles will be the key to Tesla's future. But with growing public protests, investor skepticism, and intensifying competition, Musk faces a tough battle ahead. We'll be watching closely to see how Tesla and Elon Musk navigate through this tumultuous period. Can Musk weather the storm, or will Tesla's market share continue to slip? What do you think about this situation? Drop your thoughts in the comments below. Don't forget to subscribe and hit the notification bell to stay updated with the latest content. Thanks for watching.
Has emerged as the dominant player globally, with over 1.3 million vehicles delivered in 2022 alone, making it the top-selling EV brand in both the US and globally. In the US, the EV market share increased by 5.8% in 2022, with over 800,000 EVs sold, a significant rise from the 3% market share in 2020. In Canada, EV sales surged by 49% in 2023, reaching over 185,000 units, with Tesla's Model 3 and Model Y dominating the Canadian market. However, tensions are brewing in North America. The US and Canada have historically had a complex and integrated automotive supply chain. In fact, the US-Canada trade relationship in vehicles and auto parts is worth over $100 billion annually. But recently, trade tensions have been escalating due to political pressure on both sides of the border. If you live in Canada and are planning to buy an electric vehicle, these changes could significantly alter your purchasing options. Tesla, the most popular EV brand in Canada, may become prohibitively expensive due to the tariffs. The price of a Model 3 could rise by as much as $20,000 CAD, making it less affordable for many middle-class Canadians. This could reduce your ability to transition to a greener vehicle, keeping you reliant on more traditional gasoline-powered cars for longer. For Canadian consumers who are already feeling the pinch of rising inflation and high housing costs, this could represent an even bigger financial burden. Meanwhile, those living in rural areas where electric vehicles are becoming more viable may find fewer affordable options if Tesla's models become priced out of their reach. Chapter 2. Canada's Protectionist Proposal, the NDP's 100% tariff on Tesla. At the heart of this controversy is Jagmeet Singh, leader of the NDP, which, while not currently in power, holds significant sway in Canadian politics due to its position in Parliament. The NDP is proposing a 100% tariff on electric vehicles (EVs) from Tesla and other foreign manufacturers. This would effectively double the price of Tesla vehicles in Canada, creating a significant competitive disadvantage for the American automaker. Why target Tesla? Why not other US companies like Ford, GM, or Stellantis, which also produce electric vehicles in North America? The answer lies in the political calculus behind the NDP's move. The NDP argues that Canada has an opportunity to become the dominant hub for electric vehicle production, tapping into its rich mineral resources, such as lithium, cobalt, and nickel, which are critical for EV batteries. In fact, Canada is the fifth largest producer of nickel globally and has the potential to meet the growing demand for battery-grade nickel in North America. In addition, the party wants to foster local jobs in the burgeoning clean energy sector. The clean tech industry in Canada is already generating around $73 billion CAD in annual revenue and employs over 314,000 people. The NDP's vision includes creating more high-paying jobs in this sector by boosting local manufacturing and production of batteries and EVs. For consumers, the impact is more immediate and potentially negative. While the NDP's proposed tariffs would help support local manufacturing, the immediate effect will be higher prices for foreign-made EVs like Tesla. If you've been thinking about upgrading to an electric vehicle, the higher prices could delay or prevent that decision. Chapter 3. The political and economic calculations behind the 100% tariff. The proposal by the NDP isn't just about protecting the domestic market. It's part of a broader economic nationalist strategy. Canada wants to shift the balance of power in favor of local manufacturers and workers by offering $10,000 incentives for EVs that are made in Canada. This could potentially accelerate the growth of Canadian EV manufacturers, such as Electromechanica, which is planning to produce the Solo EV in Canada. Tesla, on the other hand, does not have any large-scale manufacturing plants in Canada. The company's operations are largely based in the US and China. As a result, Canadian consumers currently enjoy relatively low prices for Tesla vehicles, thanks to the lack of significant tariffs. However, if the NDP's proposal goes through, the costs of Tesla vehicles could skyrocket in Canada, severely limiting the company's market share. In 2021, Tesla's market share in Canada was over 50% of the total EV market, with nearly 19,200 units sold. If the tariffs go into effect, prices for the Model 3 could increase by $20,000 CAD or more, pushing the vehicle into the luxury car category, which could shrink Tesla's consumer base in Canada. Tesla's response options are limited, but there are a few possibilities. The company could build a factory in Canada to produce EVs locally, circumventing the tariffs. Another route would be for Tesla executives to lobby the Canadian government to prevent the tariff from being enacted. However, both options could be time-consuming and costly. A new Tesla Gigafactory would cost anywhere between $1 billion to $5 billion USD to construct, according to industry estimates. Chapter 4. Trade Implications. The Trump Factor. But the plot thickens when we consider Donald Trump's tariffs. Trump has previously threatened to impose 25% tariffs on foreign imports into the US, including steel and automotive parts. In 2018, Trump imposed a 25% tariff on steel and a 10% tariff on aluminum from Canada and other countries. This is still affecting the global automotive supply chain. If Trump were to impose additional tariffs on Chinese-made EV parts, Tesla's production costs would rise, potentially leading to higher car prices and lower sales. For consumers, the trade war could result in higher prices for all vehicles, especially foreign-made ones. If Trump's tariffs go into effect, the cost of American-made cars could rise significantly, making it harder for average consumers to buy new vehicles. For those living in border towns or regions where cross-border